What's up, guys? Welcome back to Roxham TV and also welcome back to Gemdream Crypto. Well, as for Bitcoin is really taking a little dive. So as I'm looking at the chart, it's sitting at 103 right now. So there's so much panic and it's really a major correction. If I'm looking at the TA just from a chart perspective, like it is a little bit concerning, both from the short time frame and also from the higher time frame. We're going to get into that. So that's at least what I'm seeing on the charts from a TA mentality. However, on-chain kind of suggests otherwise. It kind of suggests that there's still some room for us to go. So there's no need to be so, basically everyone is so flooding the market. Everyone is talking shit on Twitter, say that, okay, it's the end. We are entering a prolonged bear market yet again. So we're going to look at TA, we're going to look at on-chain, and of course, we're going to do news analysis because that's what we do every single day on Roxham TV and also on Gemdream Crypto. As for yesterday, like if you guys watch my live stream, watch my show, you know, yesterday I only give out a interview. I didn't do like a live analysis like this because yesterday I went to the FinTech Week in Hong Kong. So let me know, you guys, if any of you attend the Asia FinTech Week. Let me know in the comment section below because I'm actually actively watching your live chats as I go live with you guys. Anyway, so we're going to talk about the Hong Kong FinTech Week. We're also going to talk about a little bit of Ethereum or Tom Lee because Tom Lee is making really bold prediction. He's thinking there's still room for Bitcoin to grow to at least 150K and possibly 200K by year end in 2025. So let's get into his thesis. Why, despite we are at a major correction, yet Tom Lee is still so bullish in the market? Like, what makes him so bullish? So we're going to look into that. But first thing first, of course, we're going to dive into the BTA. We're going to dive into the short-term chart of BTC. So BTC is experiencing a lot of short-term bearishness for sure. One thing I noticed, so we're starting, actually, I kind of want to start at with the daily today. So with the daily candle, one thing I noticed is that we are breaking out of this rising support trend. Looks like we're going to actually close below this rising support trend, which is, again, is showing a lot of weakness. Okay, for me to flip bullish again, I really need to see Bitcoin actually close above this and really find this as support. And like, as I keep mentioning, the more we trade around, like the closer we trade around at the support level, the weaker the support is getting. So I really want to see Bitcoin not only retest the support, but actually go above this support trend. So that's one thing I really need to see Bitcoin to do in the basically shorter time frame on the daily candle. And if we zoom out, you know that on this channel, we have been bearish since Bitcoin like reached 126K. And so far, we are still technically under this downtrend. So anything, I know we get really close to it. We reach like 116, very close to 117K. Looks like we are breaking out of this downward momentum. But like if you zoom out, anything below this downtrend is actually just a dead cat bounce. So we could be like, okay, we get close again and then we get rejected, keep getting rejected. So that's another bearishness I'm spotting. I really don't want to, like, we definitely need to get out of this downward momentum for me to basically completely flip bullish on Bitcoin again. But right now, I'm afraid to bring it to you guys. I'm really not seeing it on the daily time frame at the very least. And one thing you guys probably noticed that I drew a list like a tiny box here. Like, what the hell is this range? So I drew this range between 98K to 102K. The reason why is, okay, I pull up the volume, then you probably know that there isn't a lot of volume around this region, meaning if we continue this downtrend, so this downtrend since 126K, and we have been building that up all the way since 7th of October, so 1 month ago. So if we don't break out of this downward trend and all we get is just like a little bounce back, keep getting rejected, we eventually gonna reach 102K. That is the last support we have. If we enter 102K, we officially enter the free trading zone. Like there is no trading volume supporting this region between 98 to 102K. In other words, if we lose 102K 102, we're gonna basically fall down very rapidly to 98K within just like one daily candle, like within just a 24 hours time frame. So that is what I see. So I really need to see Bitcoin get above instead of just like keep getting rejected. We keep getting that cat bounce. So this is what I see. If we lose this 102K again, this is a critical support I'm eyeing. Like if I'm zooming all the way, like even till March 2025, I'm still not getting any data, any trading volume around this region if I even zoom out to March 2025. So this is very concerning. If we lose 102, the next support we have is 98K, and if we lose we're gonna fall to 98K at a really rapid pace. This is what I see on the daily chart. So if we lose this, is macro bearish for sure. Let's also hop onto the weekly chart to see at the basically higher time frame. Like okay, and the higher time frame, we do have like it's not all doom and gloom. I'll just put it that way because okay, maybe my intro is a little bit scary, but that's on the daily chart. On the weekly chart, there is still hopium. I'll just throw it out there. There's still hopium because technically speaking, we are still above the 50-week moving average. So if we zoom closer, let me remove all the drawing. So the 50-week moving average, we are just above the 50-week moving average. So we are sitting at almost 103, let's call it 103, 102.9K. So that's where the 50-week moving average is sitting at. The reason we are eyeing this so closely is that I really need to see Bitcoin. Actually close above the 50-week moving average. We are still at the beginning of this week. So this is the Monday chart. So today's Tuesday. So there's still 5 more days to come for this candle to close. Like, okay, since the short term, like the daily time frame is suggesting more weakness to come, I won't be surprised to see this daily candle, meaning this week, we actually visit the 50-week moving average. So like if we touch 50-week, it's fine. Like a quick wick to 102K, that is again aligned to our daily time frame analysis as well. So if we quickly dip to 102K and then we bounce back and really use that as support, that is okay. However, one thing I do not want to see is that this daily candle actually close below the 50-week moving average. Then we're going to have an issue. Like then we really need to talk about the B word, which is the bear market. And I know people are not going to like hearing this, but it really depends on how the weekly candle perform. And since we are getting so close right now, all the critical point, the turning point is whether we close below or close above the 50-week moving average. Like if we close above, then it's going to be the best buying opportunity ever. If we close below, like I'm going to see you in the next bull run. I'll be gone. I'll be selling my bags. All right, so timing the market is extremely difficult. If you guys have an investing mindset, that's okay. But like if you guys are trading, then yeah, this volatility, you need to be able to stomach this kind of volatility. All right, so that is the 50-week. Like there's still hopium. Of course, we are eyeing this very closely. Let's see how it performs in the next few days, and basically how we close this weekly candle, and then we can come back to revise our thesis. Like this is not the, I would say, not the first time Bitcoin visiting the 50-week moving average. Like we have done it here. So that is in April 2025. We actually wick below the 50-week, which is okay. We've done it here. We've done it here again. So, well, sorry about that. So we've done it here again. That was back in September 2024. And it turns out because it's just a week, like, let me zoom closer, you could see. So turns out if it's just a week, again, we're not closing below. This is a perfect opportunity to purchase and scoop up some BTC. And yeah, so basically we have been doing that, like officially touching that for like 2 times. Do you count this as 3? Oh, well, no, right here. So do you count this one as 3? That is back in 2023 September. So yeah, I would say it's quite interesting because like both of this, like 2023 and then 2024, we both occur in September. Like the correction went so close to the 50-week moving average. But yeah, I mean, we are eyeing this very closely. Let's see how it performs for Bitcoin price. All right, so that is at least the hopium we have. Let's also give you the bearishness I've been spotting, actually, because we have to come up with a balanced review instead of just like how the Moon Boys talk. All right, so one thing I noticed from the RSI is that we have been forming this bearish divergence all the way since March 2024. So if we go here, we're still forming this bearish divergence, which is, again, it's not great. This, like, in order for us to be completely bearish, like, okay, we have actually been building for months or like more than a year and a half, actually. So for me to classify Bitcoin officially enter a bear market, there might still be weeks to come. This bearish divergence actually aligned with the 4-year cycle as well, because what the 4-year cycle has been telling us is that Q4 2025 is going to be the cycle top. We don't know for sure if 126 is already the all-time high for this cycle, but what this bearish divergence is suggesting is that we are at the later stage of the bull market for sure. So this is one bearishness I saw from the weekly chart of BTC. And another thing, okay, let me go ahead and remove the drawing. Another thing that I spotted is the support trend from the hour side. So we have this like tiny, like a little bit like a rising support trend, and it looks like we are on the edge of that. So I really need to see our side on the weekly side bounce back up instead of just like going below. Like going below again, that's more bearishness. So let's see if Bitcoin managed to bounce back. If not, if we go to if we lose this support, then yeah, I'm afraid to break it to you, looks like we're gonna fall off the cliff. So let's see how the momentum plays out in the coming days or the coming weeks. Again, October, it has been very disappointing. We closed with a negative October, so we lost like 3.69% in October. Usually we're gonna have an October, but again, like some people would argue, oh, October is not the best months for Bitcoin history is actually November. So November, which is right now, okay? We are still at the first week of November. Let's see how this plays out. But at the moment, we're still generating a negative 2.35%. I would take it with a pinch of salt because, like, if you actually scroll down to see why people say, okay, November is actually the best month for Bitcoin. If you look at the average, they are doing 42.3% return in November, whereas October is only 19%, close to 20%. However, if you actually dive deeper into the numbers, the reason why November is higher is because we have, well, 2013 and it's generating 450% in just 1 month alone. So this is kind of like taking the entire column up. So I will take it with a pinch of salt in terms of November. I'm eyeing very closely on the tier instead, but October has been very, very, very disappointing. And the amount of manipulation, the amount of those like tariffs come and go in and out, the roller coaster that we experience, and the insider trading, I would argue like October 2025 is like one of the most dramatic, craziest month in terms of in a whole Bitcoin history. I would say one of, maybe not the craziest, but definitely one of them. All right, so let's see how November plays out. Another chart that I'm looking at is, of course, the DXY, because we know DXY has an inverse correlation with BTC. So the reason why we have an inverse correlation is that, okay, if people see that USD is already rising in value, why the hell they would invest in BTC? Like there's no reason for them to take on that extra risk, right? Might as well just hold on to the fiat or maybe to other FX or other currencies that they have. Why the hell they will invest in BTC? So from the weekly chart of DXY, we can see that we are basically on an uptick. We are reaching 99, very close to $100. And we also have this like rising support trend because in like a few weeks ago, we were looking at this rising support. It's like the same thing applies to the DXY chart as well. If we lose this support, then DXY gonna fall off the cliff again. However, like if not so, like I'm actually eyeing a major resistance at $100. So let's see if we're gonna get rejected. Gonna see some resistance at $100. If so, this is gonna be good news for BTC. So if we got rejected at $100, so hopefully that will align with the so-called November narrative, but I'm eyeing the chart very closely. Anyways, this is what the TA has been suggesting us, and as I keep on bringing out this like there are three groups of people, like the first group is that we have already seen the cycle top, so 126K. Second group is that, okay, probably November, or maybe if we're lucky, we're going to stretch the bull market to December. And then the third group is that this cycle is so different. And as I am reading the live chat, I know Bam Bam Crypto is siding with the that group of people, like this cycle is different. So let's hope everyone on so the Moon Boy and including Bam Bam Crypto is correct, because I would love to be wrong. But like as for the chart, I'm still okay. I'm watching the 50-week moving average very closely. And as we are getting at the latest stage of the bull market, we need to ask this question, like if either of the scenarios play out, what your strategy gonna be? Like we really need to know, okay, when to react, what to react, basically to react or not to react. That is the ultimate conclusion we have. Again, I'm not a financial advisor. I don't know your financial situation. So it really depends on what you want. Like I share some of my personal experience when I was talking to friends because they were asking for my basically how I feel the market at the moment. Well, I would say, okay, are you okay with holding your BTC for if BTC drop 50%, are you okay to hold your BTC for another 1.5 years? Some of them say okay, some of them not. Then I mean that ultimately answer what you should do, like whether you should take a little bit of profit or just hodl till I don't know, till the moon. All right, so that is for TA, and let's also hop onto the on-chain because like on-chain is kind of offering a different perspective. And the first indicator I would like to share is the Mayer multiplier, so Mayer multiple. So this shows how far Bitcoin's price is above or below its long-term average. Is calculated by dividing the current Bitcoin price and the 200-day moving average. If the number is too high, it means Bitcoin may be overbought. Prices have gone up too fast. If the number is slow, it means Bitcoin may be undervalued. Again, it's a good time to buy. Historically speaking, when the Mayer multiple goes above 2.4, so that's the pink line at the very top. So, or maybe red line. Okay. Bitcoin is in a very hot zone, often near the top of bull run. If it falls near or even below one, so that's the blue line I'm seeing here, it's usually a strong buy zone. When smart money starts accumulating, what's happening right now is that the Mayer multiple is sitting near the lower end of its range, close to the 200-day moving average, which is around 109K. That means Bitcoin is very cheap right now. Throughout this bull market, the Mayer multiply has been moving between 200-day moving average, so the blue line, and also the mid-range, so the orange line here. We are currently near the bottom of the zone. That means this could be a healthy reset, like a cool down before the next move up, or it could be some sign of weakness if momentum keeps dropping. But looking at other market data, the more likely case is a reset, not a start of bear market. In other words, like the market's cooling down, not crashing. It's just like recharging for the next leg up. Let's also hop onto the second indicator of the on-chain analysis. So we have talked about this a few times on Roxham TV. So net unrealized profit and loss by set score. So this helps to see how much profit or loss Bitcoin holders currently have, even if they haven't sold yet. If people bought Bitcoin cheaper than the current price, they are in unrealized profit. If they bought higher than today's price, they are in unrealized loss. The set score, basically, it makes it easier to compare today's data with history, showing whether the market is in extreme fear or extreme greed. There are three main groups on this chart. So we have basically the pink line, so the short-term unrealized, basically short-term NUPL, unrealized profit and loss. And then we have the long-term NUPL, and then we also have the NUPL set, which is the yellow part. So blue, that means we are in extreme pain, max pain. Orange, that means there's still excitement, and red, of course, is euphoria. What's happening right now? This is actually like zooming out till 2024. There might be a little bit of top, like we see the taking up the orange color, but right now it's not showing any big unrealized profits across the market. That's very unusual. If this were truly the top of the bull cycle, in the past cycle before a major top, we saw this chart turn bright orange, like here, or bright red, signaling excitement and euphoria. This hasn't happened yet. During the last two local peaks, like we saw a small excitement. So here the orange color is flashing, similar to what happened back in 2017 before Bitcoin's final explosive run. So right here is flashing a orange color. So what this is showing, so basically is suggesting that we haven't hit the real top yet. The biggest move of this bull run may still be ahead of us. And then the third indicator we could look at and over some perspective where the market is heading to is of course the ETF daily flow. So it shows basically it mainly focused on the institutional money because so-called institution they are smarter than the retail. And what's happening right now is that last week ended with 3 straight days of ETF outflows. So totaling close to like $800 million leaving Bitcoin ETFs. Over the past 2 weeks, the total outflow reached more than $2 billion, showing real fear in the market. The big question now is this massive outflow a sign that we are close to forming a bottom, or could more short-term pain still be ahead of us? Like retail sentiment is clearly weak, like people are scared, but the story looks different among institutions. Like long-term holders have been selling, yet despite all the selling pressure, Bitcoin is still holding above 100K. So I would say it's actually very impressive. And that resilience suggests that the long-term bull trend is still very much alive. The short term may be shaky, there's no doubt, but if history repeats, this fear could set the stage for the next major rebound. Anyway, it's like I would say Bitcoin TA from the daily time frame, so shorter time frame, is suggesting some bearishness. As for the weekly, there is still some hopium, some optimism. On-chain is telling us there's still a bigger bull run ahead of us. Like we still haven't seen a cycle top. So there's a little bit of contradiction. Again, it boils down to which part of people you believe in, like which group of people you are. Like the markets absolutely don't care about how we feel or how we think. We just have to deal with the market because the market is basically the big boss. So whether you like it or not, like this is the truth that I'm seeing from all the analysis, from the charts, from the on-chain indicators. So really, maybe ask yourself this question. So there's a key takeaway for this show. Like either of this scenario plays out, like how would that change your life? So everyone has a different financial position. So yeah, have a think about that. And then I know there's a lot of data, a lot of numbers. So what we're gonna do is probably gonna take a break, and then we're gonna dive into the news section in a bit, because like moving forward, we're gonna talk about Hong Kong. Like Asia is doing tremendous thing for crypto. There is still a lot of a lot of bullishness in the macro trend, and we know the US is gonna cut rates. So we're gonna look into the news section, perhaps to build up more comprehensive analysis so that you guys could come up with the decision. Anyways, I'm gonna see you guys after the little break we have.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
At the tone, please record your message.
Alright guys, welcome back. As I promised you guys before we went on that little break, we're gonna look at some macro news because um I'm not sure if you guys attended the if you guys are where you are, but like if you didn't know already, if you couldn't tell from the skyscrapers I have at the background, I'm in Hong Kong. So what happened in Hong Kong this week is that we have the FinTech Week, which is again more like TradFi mindset focused more on the payment side of things, but we are slowly seeing all these like blockchain projects having their little booth at these like fintech or TradFi event. So I went there yesterday. It's actually happening today as well. So I wonder if any of you went and actually joined the event. So it's holding between 3rd of November to 4th of November at the Hong Kong Convention like Exhibition Center. And then the event really highlighted the AI in finance, tokenization, aka RWA, digital assets, because Hong Kong is going all in crypto, and of course some cross-border payments. Kind of want to focus on the bridge between TradFi and Web3. I've seen so many projects. The whole pitch that they have is basically the bridge between TradFi and Web3 because TradFi people don't know anything about crypto. All right, so there are some highlights, and of course, a lot of them, there are major announcements being made. Hong Kong MA actually unveiled some updates to its long-term strategy, really emphasizing in the whole AI-driven banking and RWA and stablecoin utility because Hong Kong is planning to launch out the stablecoins. And then integration between AI and blockchain gonna get tighter to each other, like how AI agents could personalize finance, enhance fraud detection, and automate cross-border settlements. And as one of the major announcements that I saw is Hong Kong to let licensed crypto exchanges connect with global markets. Like this is I feel like the Twitter and the market is not talking enough. Like this standout announcement came from our SFC, the CEO of SFC. So Julia revealed that licensed crypto exchanges can now connect to global order books, while the Hong Kong MA, so Monetary Authority, plans to issue the first stablecoin license next year. Like in future phases, regulators may permit locally licensed crypto brokers, not just exchanges, to access international liquidity pools. What this means is that if approved, the rule could open doors for firms like Binance and Coinbase to enter Hong Kong more easily through brokerage licenses instead of full exchange applications, which can take years to process. This is, again, a really massive news. I was really surprised why people aren't talking this enough because I'll offer some saturation about Hong Kong, so some context. So of course we have the licensed exchanges like Hashkey or OSL, but like we don't have the most popular options like Binance or Coinbase. Like basically it's not legally right to use those exchanges, yet everyone is still using it. Like all the retailers in Hong Kong are using it because it's so convenient and they have all the token pair. Because sometimes we like to be degen and we like to have a little fun and trade a little bit altcoins, while as the license, so basically the proper exchanges in Hong Kong like Hashkey and OSL, they don't offer as much of trading pairs. So that's why like this has come across at a surprise to me and a really good news. Like if Binance and Coinbase could basically not re-enter, but like officially enter the Hong Kong market again. So I would say the key takeaway is that Hong Kong is really going all in crypto. Though the events, the whole atmosphere, because I went there yesterday, the whole atmosphere was a little bit more like elite. So very TradFi mindset, more TradFi than euphoric. Like I guess it's of course like fintech at the end of the day is a TradFi event, but there were a lot of like high quality discussions indeed. And if you look at who attended the event, like okay, Richard Tan, so of course he's the Binance CEO. So not only Binance, we have like Solana Foundation, Ethereum Foundation, Hashkey Capital. So again, that's the exchange in Hong Kong. And government-wise, if we go back to the article, we scroll down, there are a lot of like known figures from our Hong Kong government. So the Hong Kong chief executive was there, and then the financial secretary, and then Hong Kong MA, SFC. So it's actually a really massive event. And Hong Kong is really trying to position itself as we are good enough to compete on a global scale. Because if we think about the crypto hub around the world, of course, we have Singapore, and Singapore is actively, like, we are competing with Singapore all the time throughout all these years. Singapore is really strong, I have no doubt, but it's really losing liquidity due to the tight regulations that they have. Like when I talk to some crypto projects, how they felt about the Singaporean government is that they they felt like they were scammed to go to Singapore, because when Singaporean government is saying to all these like welcoming all these like crypto innovation with open arms, but once they actually got there, they will feel like the regulations is so tight, they might as well just come back to Hong Kong, because few years ago, we are seeing a trend of like all this innovation, all these talents are moving away from Hong Kong to Singapore. But right now, because the regulation is too tight, we're kind of having a reverse trend. So Singapore talents are coming back to Hong Kong. So that's one. And then the other one, the major competition we have is, of course, UAE. Like UAE is tax-free, very fast-moving, but like Hong Kong wins on Asia integration and China proximity, because I know there are a lot of projects are eyeing very closely, like eyeing on the Chinese market, and Hong Kong is definitely offering that convenience to all these projects. As for USA, it's home to Coinbase, but there's still some confusion when it comes to the regulatory environment. So maybe I'm biased, okay? I'm from Hong Kong, but like I'm still seeing a lot of edge of Hong Kong. So yeah, robust fintech ecosystem and clear framework for tokenization and stable coins. So that's what I saw from the fintech week. I went yesterday. It's very AI focused, so focus on AI, tokenization, globally connected finance. And SEC's global liquidity announcement, which we just touched upon here, could really unlock billions in trading volume and attract top-tier players back to the city. With clarity in regulation, support from China, and momentum in Web3, I would say Hong Kong is doing really well, whether it's TradFi, DeFi, and AI coverage under one skyline. All right, so that's some of my own experience that I saw from FinTech Week. And oh, like this thing I think is quite interesting, because like I saw this latte art robot yesterday, and what I did is that I uploaded a picture of myself, so that's on the right side. I uploaded to this machine, and then the robot made me this latte art, and I was really surprised because like it looks just like me, and I was like drinking myself. I find it really weird, but like the art is really impressive, I would say. All right, so let's move on to the next news I've got for you guys is Tom Lee. So Tom Lee is, despite everyone, all the retails are so bearish, calling for a bear market, like we are so aligned with the 4-year cycle. Tom Lee is saying that we still have room to grow. So 150,000 and 200,000 by year end is still very much on the table. So he was on CNBC. He's actually like shilling cryptocurrency every once in a while on CNBC. Actually, very frequent. He's a very, very frequent guest on all these like news media. All right. So if you didn't know, like Tom Lee, he's a long-term Wall Street strategist and one of the earliest TradFi figures to publicly champion Bitcoin and Ethereum. As of right now, like Tom Lee has once again doubled down on his really bold prediction. So 150K at the very, very least. Like if he doesn't see that, it will be really, really surprised. Like the reason that he gave is that we have easing inflation, we have Federal Reserve rate cuts, we also have growing institutional adoption that all adding a lot of fuel to the next bull run, next leg of bull run. So some critics argue that he is basically being a perma bull, like noting that his forecasts are often directional, like directionally right, but extremely early. Like, okay, talking about this, we kind of have to go back to his track record, like his predictions that he has thrown out. So he's a TradFi guy, and a lot of the predictions he made for TradFi was really accurate. So take a look at this. 2023, like Tom Lee was the most accurate forecaster among those surveyed by Bloomberg for his 2023 S&P 500 prediction, correctly calling for a significant surge. And 2024, he predicted that S&P would finish above 5,500, later hiking his forecast to 6,000. The market finished just below 5,900, which was an accurate directional call and close to his updated target. And then, he's very much to be known as a long-term bull. He has a consistent bullish outlook. So people are saying that he's just being a perma bull. That's all. As for cryptocurrency, the predictions that he made, he is an early advocate. So Tom Lee was the first major Wall Street strategist to provide formal Bitcoin research coverage to institutional clients and correctly predicted its rise when it was trading around $5,000. But he made some wrong calls as well, like some misses. In 2018, he predicted Bitcoin would reach 125,000 by 2022, which of course didn't happen. He currently maintains a very bold long-term price target for Bitcoin of 1.6 to 2 million if it matches gold's total market cap. And he's still standing by his stance that, okay, Bitcoin going to reach maybe 150, at the very least 150K to 200K by year end. And as for Ethereum, it could reach to $10,000. We know that he is really bold, and in terms of his all-in Ethereum strategy, we know that, okay, he's also the chairman of Bitmine, and Bitmine being the Bitcoin mining company kind of pivot to Ethereum treasury company. So in terms of the ETH treasury trend, Bitmine is sitting at number one. So they are holding a whopping 3.4 million Ethereum on the balance sheet. That's crazy. Like we actually look at the number, is a up only chart, and they are really killing other companies, like killing the competition. Like even Sharplink want to get close. Like there is at least 3x, like 3.5x amount of ETH they are holding on the balance sheet. So that's how bullish a mega bull when it comes to Ethereum. For Tom Lee, they have a goal of accumulating up to 5% of total ETH supply. When Tom Lee set it out to public, so when he set his idea on CNBC, like everyone was a little skeptical, like 5% of total ETH supply. That's a lot of ETH. Like, does he have the money to do that? But turns out he's already halfway there, like 56% to his goal. I would say that's really, really impressive. So Bitmine usually buy the ETH directly from the Ethereum Foundation. These are OTC purchases via institutional desk, helping stabilize market. So of course, now Lee is betting big on Ethereum. He's saying 10K by year end of 2025. His reasoning is because of dominance in tokenization, of course, RWA, in DeFi, in stablecoins, because we know stablecoins is only going to get bigger. All the institutions are trying to launch their own stablecoins and they're building on Ethereum. So that's why he is so bullish on Ethereum. And he also plans to introduce staking yield for corporate ETH holdings because his argument is that turning Bitcoin mining into a ETH treasury is making a lot more sense compared to Bitcoin treasury because as of ETH, you're going to get that staking reward that you don't get from Bitcoin. So that's what he did. So call it wise or risky. I don't know. You are the judge. Like some people would think it's wise because they are accumulating ETH on dips, kind of mirrors what MicroStrategy has been doing. And MicroStrategy has a proven record that turning into a treasury company, it makes sense. And then ETH is a growing, there's like growing demand, growing institutional demand. So that thesis is very much intact. And as for the long-term potential for like an 80% plus returns if ETH hits hit 10K. So some people call it wise. Again, it's extremely risky because like ETH, at the end of the day, we're still trading below 4,000. And in terms of the price, it has been underperforming Bitcoin for years, ever since the bear market of 2022, I would say. And it was like a downtrend only. So like ETH is trading well below its all-time high, while Bitcoin, we know once we got through the Bitcoin spot ETF, we have entered the moon phase already. So that's the difference between ETH and BTC. So some people call it wise, some people call it risky. I don't know. Let me know what your thought is from the comment section below. But what we could conclude from this, from Tom Lee and this guy, like he blends Wall Street fundamentals with Bitcoin conviction. Like his forecast is really bold, very optimistic, bull time only, but often is a little premature. Like right now, he's using a macro lens to look at digital assets. I know Bitcoin's definitely gonna get there one day, but like, are we big enough to be basically on par with the S&P 500, with the entire TradFi market? I don't know, time will tell. This kind of aligned with the prediction, basically the three groups of people that we're talking about in the beginning of the show. Like, basically, Tommy's using this mentality like this cycle is different because we have institutional imam, like all this nation around the world is trying to get into the Bitcoin market. So maybe it's different. So anyways, let me know what's your thought about his strategy. Do you think Bitcoin will reach at least 150K by year end and in 2025? Let me know what's your thought. The final news that I prepared for you guys, we're running out of time, so I'm trying to talk about this as quickly as I could. So Strategy made an announcement yesterday. We have STRE. This is the like a new euro-denominated perpetual preferred stock. The ticker is STRE, or someone call it STREAM. This marks the company's latest capital raising move to buy more Bitcoin because, as we're talking about turning into a treasury company, so let's go back to MicroStrategy because that's where Tom Lee's got his idea from. So The latest Bitcoin purchase has been significantly smaller compared to before, because if we go to the balance of MicroStrategy, the purchase has been diminishing on that of basically yesterday. So they added less than 400 BTC on the balance sheet. So you can see the purchase is getting smaller and smaller. We rarely get a full figures BTC purchase anymore, whereas look at July, we get a 21,000 BTC being added. So we can see the trend because the money being raised is getting smaller. Anyways, it's a little bit confusing when it comes to all these STRE, STRC. There's actually a table to look at all this stuff. So of course we have the original MicroStrategy stock, so MSTR, but we also have STRF, STRC, STRK, and STRD. It's extremely confusing, and right now, since yesterday, we have STRE, which focus on the European market. All of this, they focus on giving out dividends. If you want a deep dive, if you are interested in knowing more about these financial products, I have a full-on video on Gemstone Crypto to look at all of this financial product individually. I'm not going to dive into each of this. Long story short, they are preferred stock. So I'm actually staying away from this because some of this, they don't have a guaranteed dividend payout, I don't know, every quarter, every set period of a time. So I find it as an investor, I don't find this appealing because first of all, my dividends are not guaranteed. I could be not getting my dividend this quarter. Second of all, the upside of the exposure, BTC exposure, if Bitcoin reaching new all-time high, my upside is capped. So to me, it doesn't make much sense. So whereas STRE is basically the Euro version of STRF. So if you guys are interested, you could look into that. But why does STRE, so that for the Europe market, why it matters? This is actually the first Euro-based BTC stock. So it opens the door for European institutional investors to access BTC exposure through a yield-bearing vehicle. And again, the reason why MicroStrategy is doing this is, of course, diversification. By issuing in euros, MicroStrategy reduced dependency on USD funding and expands its investor space way beyond just US. And this actually fits into the whole MiCA era with the EU's new MiCA framework. Regulated access to crypto products is growing. So strategy is kind of want to be the fast mover and taking the advantage as well. So this does matter for the European market and also for MicroStrategy. And all I could say is MicroStrategy is an extreme genius, come up with all these financial products. So he's raising preferred stocks, using equity to raise their funds instead of debt or convertible bonds. But I would like to dive deeper into this. However, we're running out of time. Let's look at the details in tomorrow's show. Anyways, just a final call to action before we wrap this up. So make sure to follow us on Twitter. So my personal Twitter is gemcrypto_. Give us a follow and make sure to follow Roxham TV as well, because we have regular update about the market, about all the global news. It's not just Bitcoin or maybe some AI, some energy demand. So there are a lot of valuable content. So make sure to give us a follow because you don't want to miss out. And that's it for today's analysis, coming to you from the Hong Kong studio, of course, for Roxham TV. I'm live from Monday to Friday at 4 a.m. Eastern Time, breaking the biggest crypto stories or market story and AI stories. So if you enjoyed the show, make sure to hit the subscribe and catch the next one live wherever you are tuning in. I hope you guys have a fantastic day, and I'll see you guys in tomorrow's show.